Hello investors and welcome to my YouTube channel where I study the best investors and businesses from around the world. This week our focus will be on how to read a 10K report. Number 1, what 10K filings are and where we can find them. Number 2, important aspects of a 10K statement, specifically the business summary, selected financial data, risk factors, management discussions and analysis, MD&A, financial statements. Reading a company's most recent 10K filing is the best way to gain a deeper understanding of its operations. Particularly for large companies, there are significant differences between a 10K filing and an annual report. Annual reports are typically glossy marketing materials that begin with 1 or 2 page CEO letter and continue with magazine-style pages highlighting the company's products or services. They're made to make shareholders and the general public feel good about the company and its leadership. This material may contain useful information, but that information will be contained within a specific agenda. This agenda isn't always malicious, but it will always try and sway our opinions. It's best to wait until after you've finished reading the 10K. What 10K filings are and where we can find them. Simply put, a 10K report is an annual report that all public companies are required to file with the Securities and Exchange Commission, or SEC, within a short period of time after the end of a fiscal year. Before making an investment decision, it is critical to read the 10K filing and many other filings in their entirety. There are, however, better ways to go about the task if our goal is simply to get to know the business in order to decide if we want to devote more time to it. We can spend more time looking at additional 10Ks if we are more efficient at looking at a 10K and quickly deciding whether more study is required. Prior to the mid-1990s, an investor would have to send a request to a company or the Securities and Exchange Commission in order to receive a paper company filing. But thanks to the Edgar system, we no longer have to wait. Edgar makes it possible to receive information regarding a company in the real time using the company search tool. We're going to run a search for Apple using the ticker symbol AAPL in a screenshot below. You can go straight to the company's filings by using the ticker symbol. Querying by a company name usually requires an extra step that lists a number of companies, so using the ticker is more efficient. When this query is submitted, the following results will come up. We can see that the company's recent filing in the results screen. This includes a number of 10Q reports, which covers quarterly periods, as well as other types of reports. We do not see the 10K in recent results, but filtering in the filing type will bring up all of the 10K reports in the system. We can see all of the 10K reports for Apple. For the purpose of our initial review, we will want the latest 10K report filed. Clicking on the document options in the latest 10K and then on to the Form 10K link will bring up the actual report. We can see that this report is about 66 pages long, which would obviously take a long time to read from cover to cover. While a thorough reading is required before investing, it is not required to gain a basic understanding of the business. We will concentrate on a few key areas in order to gain a basic understanding. Business summary. From pages 1 to 5, the business summary is only 5 pages long. The section's purpose is self-evident. The management is expected to provide a clear picture of the business's economic purpose, the products or services it sells, the key economic conditions under which it operates, a sense of its history, and an assessment of the industry's competitive conditions. This section should be read carefully from beginning to end. Apple designs, manufactures, and markets smartphones, personal computers, tablets, wearables, and accessories, as well as a variety of related services. As we can see from the overview, management will typically give an overview of the company as a whole, as well as the segments that uses for management and reporting. We see for Apple that they've broken down their business into 2 segments. Products, this includes iPhone, iMac, iPad, wearables, home and accessories, and services. This includes advertising, AppleCare, cloud services, digital content, and payment services. This presentation quickly gives us a better understanding of the business so that we can all understand it better. In general, we'd like to see management make an effort to explain the business to investors. Customers in this case are mostly from the consumer, small and mid-sized business, education, enterprise, and government sectors. Though its retail and online stores, as well as its direct sales force, the company sells its products and resells third-party products directly to consumers, small and mid-sized businesses, education, enterprise, and government customers in most of its major markets. Management also breaks down revenue by category for the previous 3 years, giving us a clear picture of how important pressure sensors are to these segments' operations. A similar presentation exists for the different segments of the business, products, and services. The next section of the business overviews covers intellectual property, customers' competition, seasonality, and other factors, all of which contribute to the overall picture and should be carefully reviewed. The business overview section is only 5 pages long and can be completed in about 15 to 30 minutes. It does, however, provide enough information for most people to decide whether to end the process and move on to something else or continue. If an investor finishes the business summary with a lot of questions about how the company works, it could either mean that management did a poor job explaining the business or that the industry is outside their area of expertise. In either case, it's probably best to look for a new company. Risk factors. The next major section of a 10K is devoted to the discussion of risks that the company and its industry face. Risk is an important part of evaluating a company, but it's worth noting that this is also where the lawyers get involved. Filings with the Securities and Exchange Commission are legal documents, and failure to make required disclosures can result in shareholders' lawsuits. These sections are usually written by lawyers who are more concerned with avoiding lawsuits than with providing much information. This isn't meant to imply that these risks shouldn't be considered, rather, it's meant to put these sections in context. Usually, each risk is presented as a title in bold type, followed by a more lengthy description, such as the following. The section isn't very informative. Almost every company operates in a highly competitive industry. Companies in nearly all industries are under pricing pressures as a result of increased competition. Although the description adds some context, it essentially restates the obvious. When it comes to an initial reading of a 10K, my recommendation for the risk section is to quickly review the title of each risk, but not to read the entire description of each risk. Areas of particular concern that will determine whether or not an investor will pursue further research on the company should be thoroughly examined, but areas that appear to be a boilerplate should be saved for more thorough examination at a later date. The same can be said for the document's legal proceedings section. Selected financial data. Look at the selected financial data section, which in most cases presents selected data for the previous 5 years, in one of the best ways to get a very quick overview of a company's economics. The selected financial data for Apple is shown here. Although the information provided in this section is insufficient to draw any conclusions, we can get a sense of things like revenue and earnings, growth, gross and operating margins, capital intensity overall, and the degree to which net income converts to free cash flow. We also look for unusual items in other, such as if the company has received a lot of large tax benefits in the previous 2 fiscal years. The best way to review this table is to make notes on any factors that stand out as unusual or worthy of further investigation, then return to it after a more thorough examination of the data. If an investor notices that certain attributes fall outside of his or her investment parameters, A review of this section may help to expedite the process. For example, regardless of other aspects of the business, leverage ratios above a certain level may make an investor uneasy. If that's the case, the investor can simply file this 10K under too difficult and move on. To effectively short-circuit the process by filtering for unacceptable attributes, the selected financial data section should arguably be read even before the business summary. Management's discussion and analysis, MD&A. This is the part of the 10K where management can explain how the company's recent results fit into the bigger picture. This section, however, contains a lot of information that is redundant with the business summary section and should be skipped when reading the 10K for the first time. This section of the MD&A, where management explains the underlying economics of the business and the results of the operations over the previous 3 years in the section of the reader should concentrate on. In Apple's case, management provides a wealth of information about the company's underlying economics. It's helpful to know that the company is sensitive to commodity prices, particularly when it comes to Chinese rare earth element production. The MD&A goes on to discuss a number of other factors that influence operating results before moving on to a summary of the results over the previous 3 years, the operational results. In the paragraphs that follow, a great deal of information is presented and discussed in great detail. Different companies will present the data in this way, but the table above is a good example. Revenue by segment is shown, as well as operating costs expressed in dollars and as a percentage of revenue. Trends in revenue and cost movement over time, as well as relative figures like operating margin, give the reader a quick view of recent trends. It also has a comparison against the S&P 500, which is a standard benchmark for the rate of returns. It's worth noting one point here that would go unnoticed by someone who only looks at a simple figure like the net income margin. When analyzing a company's results of operations, a transitory factor such as a higher tax benefit is given less weight than factors such as the gross operating margin trends. In general, management goes over each of the key figures and explains the reason for the changes in revenue, cost of goods sold, trends, and operating costs, and so on. In some cases, management will present adjusted non-GAAP figures that they believe better reflect the business's underlying trends. Do we accept non-GAAP adjustments as is? That is something that no good analyst should do, but that doesn't mean that all adjustments are illegitimate. At this point, it's unlikely that we know enough about the company to determine whether the changes are necessary. However, we would raise one red flag right away. Management has a history of reorganization changes every year, but management wants investors to ignore those changes in adjustment to net income. A company that has yearly restructuring changes cannot truly claim that these changes are unusual. After that, the MD&A moves on to cash flow, debt, liquidity, and capital resources. All of these areas are critical, but we are recommending quickly reviewing them so they can be revisited if the company is taken more seriously after reading the financial statements. Financial statements. The next major section presents the company's audited financial statements and detailed notes to financial statements. For the purpose of this video, I'll assume that the viewer is aware of what to expect in this section and won't go into too much detail other than to recommend a selective reading of the notes of this initial review of the 10K, with a more thorough review to come once the company has been given more serious consideration. Some investors may prefer to read the 5-year summary first and then take a quick look at the financial statements before reading the business summary, slightly reversing the recommended order in this video. This can be done as a process of elimination by investors who are more quantitatively oriented and have checklists of factors that would disqualify an investment. The danger is that without a basic understanding of the business, certain figures in the financial statements could be misinterpreted in a way that obscures the true economics. Finally, the investor determined the review sequence, which must correspond to his or her preferred process based on prior experience. So nothing is set in stone. It's a bit risky to suggest that an investor should not read a 10K report word for word, but that's not the point of this video suggestion. Instead, I propose a method for a potential investor to determine whether a company is worth investigating further. It might be fine for an investor to read a 10K line by line and word for word during their first reading in the perfect world with unlimited time. In practice, this means that an investor will have to invest in far fewer companies than it would otherwise be possible. When it comes to the research process, successful investors take a variety of approaches. But one common thread that keeps cropping up is that the best investors are voracious readers. Rather than tolerating a calendar full of meetings and conference calls, Warren Buffett spends nearly every day in his office reading. When his children were young, Charlie Munger read so much that they thought he was a book with a couple of legs sticking out. It makes sense to be exposed to as many companies as possible in a competitive investment environment, and to do so as efficiently as possible. One way to do so might be to implement the ideas presented here. A subset of the companies initial reviewed would be given more in-depth consideration at a later date, always before making an investment decision. During Berkshire Hathaway annual meetings, the importance of reading has been mentioned several times. People in the audience always nod and agree with the sentiment, but the majority of them do not act on the advice. There are so many distractions in modern society that it appears that there is little time to be focused on reading. This gives those who can tune out those distractions and devote time to reading a significant advantage. This, however, is only the first step. Dedicating time to reading is important, but it is insufficient in and of itself to improve results. Our time must be well spent, and our focus must be maintained. I'll leave you with Charlie Munger's quote that might get you motivated in your investment journey. We read a lot. I don't know anyone who's wise who doesn't read a lot, but that's not enough. You have to have the temperament to grab the ideas and do sensible things. Most people don't grab the right ideas or don't know what to do with them. Charlie Munger. Thank you so much for watching, and if you like this video, please share it with your friends and family. It helps the channel a great deal. Leave in the comments section your thoughts about the video and who I should cover next. With that said, thank you guys so much for watching this video, and I'll see you in the next one.